I'm Mark Crumpton in New York. You're watching Bloomberg Technology. Here's a check of First Word News. The Democratic National Committee is suing the Trump campaign, Russia, and WikiLeaks. The suit claims they interfered with the 2016 election and also claims Russia launched, quote, a brazen attack on American democracy that began with a cyber attack on the committee. Some frightening moments at another Florida school today when a gunman opened fire, wounding one student before being taken into custody. The wounded student, a 17-year-old boy, was shot in the ankle. Meantime, in Parkland, Florida, scene of the February high school massacre, students led a nationwide walkout on this, the 19th anniversary of the Columbine High School shooting, which left 13 people dead in Littleton, Colorado. Final preparations are underway in Houston, Texas for Saturday's funeral for former First Lady Barbara Bush. Mrs. Bush died on Tuesday at the age of 92. Federal aviation regulators are planning to make emergency inspections mandatory for one of the world's most popular jet engines. People familiar with the matter say the move is in response to the fatal accident on a Southwest Airlines plane this week. Southwest announced it would provide $5,000 checks and $1,000 vouchers to the plane's passengers. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton in New York. Bloomberg Technology is next.
I'm Caroline Hyde in London, in for Emily Chang. This is Bloomberg Technology. Coming up, Apple's downturn, slowing smartphone demand and chipmaker volatility, sending its stock down, down, down. Plus, YouTube's ad problem. While one giant advertiser returns to the fold, its other sponsors face an extremist problem. And Ericsson shares soar, the most in a decade, as the Swedish giant proved cost cuts are taking effect. But first, to our lead. Markets finishing the day lower. It's the second day in a row, pairing the weekly gains for the Dow, S&P and the Nasdaq. Behind much of this weakness, you guessed it, it's tech. Bloomberg's Abigail Doolittle has more for us. So talk to us about what was tugging these indices lower, Abigail.
Well, it turned out to be a pretty bearish day for the major averages, Caroline. Following yesterday's drop, the Dow, the S&P 500 and the Nasdaq all shed quite a bit today. The Dow and the S&P 500, 0.8%. The tech-heavy Nasdaq down quite a bit more, underperforming, down 1.3%. And that points to the big drag, tech. Now, funny enough, consumer staples, that was the worst sector from a percentage standpoint yesterday and today. But technology is a 25% weighting to the S&P 500 and a 50% weighting to the Nasdaq. So with tech down sharply over the last 2 days, that has really caused the major averages to slide. Still higher on the week, but really pairing those gains in a big way. And behind this, it appears jitters ahead of next week's slew of earnings for some of the big tech companies, including Microsoft, PayPal, Intel. We also have Facebook. You see pretty big declines there. So investors a little bit nervous about what all of this could bring. And I was mentioning those weekly moves for the major averages. If we hop into the Bloomberg, we can take a look at how this appears on a weekly basis. This can be viewed in the GTV library. And we're looking at the weekly moves for the major averages. In white, the NASDAQ, which we see tends to swing more than the other major averages, the Dow in blue and the S&P 500 in green. Now, it's a second up week in a row for the major averages, but on the drop today and yesterday, both the S&P 500 and the Dow are now down on the year. So earlier this week, there was really quite a bit of a bullish feel, Caroline, and now toward the end of the week, it's a bit bearish.
Yeah, fascinating. I mean, this was a trend. We're seeing some volatility, particularly in tech stocks on this side of the Atlantic as well. I'm looking in the Bloomberg. If you type in looking for the stock 600, I'm typing in MRR, which shows you what were the biggest gainers and losers on the day. And notably, if you look at it, we're seeing some of the big chip makers in particular feeling the pain. ASM off by more than 8% at the bottom there. ASML, which is an equipment maker, was also down. Infineon in Germany down by 1.5%, as was ST Micro. The chip makers, it was a big theme in the US as well. Yeah, you're really getting to the heart of the matter there, Caroline, because the SOX, the Philadelphia Semiconductor Index, the major averages may not have been down in the week, but the SOX down more than 4%, really taking a big hit as lots of the chip makers slide, including Taiwan Semiconductor,
Avago, or excuse me, Broadcom. Avago is the symbol for that company, but Qualcomm, ON Semiconductor, lots of weakness there. And those are Apple suppliers. So midweek, Taiwan Semiconductor came out with its earnings report, and the guide for the second quarter, disappointing. They are, of course, a supplier to Apple. JP Morgan, an analyst there, saying that the weakness for Taiwan Semiconductor definitely has to do with weaker demand for the iPhone. And many analysts coming out this week, Caroline, with similar calls on Apple, suggesting that either the March quarter could perhaps be a little bit weak. Today we had OTR Global downgrading shares based on China checks around weakness for the March quarter, while most analysts are focused on the guidance for the June quarter, including Morgan Stanley, which cut iPhone shipments, with the analysts there saying that it's likely that the consensus for the third quarter will have to come down. So the stock correcting, not a formal correction, but pulling back on these reports. It's going to be very interesting to see what comes out of their earnings report. It's not next week, Caroline, but the following week on May 1st. All eyes on that report, but I think jitters around the upcoming Apple report pressuring some of those other big tech companies that we were taking a look at a moment ago. So it'll be interesting to see how those reports come in. Perhaps it will soothe some of these nerves that we're seeing fray to some degree for traders and investors as this week comes to an end.
On tenterhooks, Bloomberg's Abigail Doolittle wrapping it all up for us. Thank you very much indeed. And as we were just hearing from Abigail, it's been a rough go for Apple of late. The tech giant stock down at least 6% over the last 2 days. It's lost about $60 billion worth of market value over the last 3. So what actually is hitting the world's most valuable company? I'd like to welcome, of course, Bloomberg Technology's Mark Gurman, who covers all things Apple. And Mark, talk to us through, we were hearing from Abigail, we're getting some cuts from some of the analysts. They're seeing fewer iPhone deliveries potentially. How big a deal is this?
Yeah, good to see you, Caroline. Right now, Apple's facing a lot of different headwinds, and not in the good sense. Their stock is down over $4 per share today, or sorry, over $7 per share today, over 4%. And they have their earnings coming up on May 1st. First of all, to step back a little bit, Apple's guidance for the Q2 quarter, which is still important for the company like all their other quarters, came in about $3 to $5 billion less than analyst expectations going into the February 1st results. So starting from there, now we have TSMC out with their earnings reports over the past few days, indicating slowing demand of communication chips. What are communication chips? Well, those are basically chips for communication devices for smartphones, the SoC, systems on a chip, which indicates that potentially iPhone sales are lower than expected. So a lot going on here, combined with some analyst reports. I saw one report from Morgan Stanley yesterday, another one today, indicating that the iPhone 10 might be discontinued. I think investors are reading too much into it. Analysts are playing it up a little bit. The reason, and I can tell this to Bloomberg watchers right now, the iPhone 10 will be discontinued because it's being replaced by another device this fall, basically just a small update to the iPhone 10. So obviously it's being discontinued to make room for the new one. So in that in particular is not such a big deal.
Perhaps not such a big deal as well when you've got analysts such as Morgan Stanley saying, hey, actually, if the numbers aren't quite what we hope come their earnings day, buy the dip. You've also got other analysts saying, look, eventually, I think Bank of America Merrill Lynch saying, in the end, so we're going to focus less and less on the iPhone numbers and more on services. So should we be sort of shrugging this off a little bit more?
Yeah, services is interesting. We'll be looking for a strong quarter-over-quarter growth either, or something close to the $8.5 billion reported the last 2 quarters from Apple in services. Obviously, they have their ambitions in news and TV and video. So we are seeing a shift toward Apple becoming more of a services giant.
Let's look a little bit, Mark, with you at the moment on another area of your expertise. I know you're a man who knows everything about phones and indeed what ties us into them. And interestingly, there's a story, AT&T and Verizon Communications under investigation by US antitrust officials. This all wrapped up over possible coordination by the two companies and indeed an industry standards group, the GSMA. According to a person familiar with the matter, the DOJ claims that the companies and the GSMA tried to hinder consumers from easily switching to other wireless carriers. Now, AT&T and Verizon together control about 70% of all wireless subscriptions in the US. Both AT&T, Verizon shares dropping on this, session lows after the report. Mark, talk to us about how important this is, how much this might have constrained the movement between wireless carriers and indeed phones.
absolutely a constraint. eSIM technology allows people to switch between different carriers on one device. Now this, quote-unquote collusion does not allow that.
And so could this, therefore, going forward, be an unraveling for the I mean, AT&T have got to be worried because they've also got the DOJ looking at their deal with Time Warner. How much are we likely to see this drag going forward? How much do you think that this could embroil GSMA? This is a big overall body that represents companies, and they put on a lot of big events that you and I attend.
Yeah, it's going to drag on for a while. This is a key issue. More phone makers wanting to be more independent from carriers, carriers wanting to compete with each other. This is a real problem, and it'll be interesting to watch in the coming months how it all plays out.
It'll be fascinating to indeed see how the stocks continue to suffer. As I say, they're both trading lower. Bloomberg's Mark Gurman, thank you very much indeed for joining us on Apple, AT&T and Verizon. Now, coming up, YouTube's advertising problem. The online video giant continues to struggle with extremist content, and prominent advertisers are getting caught in the middle. And if you like Bloomberg News, check us out on the radio. You can listen on the Bloomberg Radio app, Bloomberg.com, and in the US on Sirius XM. This is Bloomberg. Now let's talk ads. One of the world's biggest advertisers is ending its over a year-long boycott of YouTube. Bloomberg has learned that Procter & Gamble, the maker of household goods such as Febreze and Crest, told its brands that they can once again buy ad spots on YouTube. Now this comes as a CNN report said that more than 300 advertisers unknowingly ran ads on YouTube videos that endorsed extremist content like white nationalism, pedophilia, Nazis and more. With me now from San Francisco is Bloomberg's resident Google watcher. It is Mark Bergen, who brought us that P&G scoop. And in D.C. is Tara Maller, Senior Policy Advisor for the Counter-Extremism Project. They've been tracking and fighting the spread of extremist content on the internet. Welcome both. Mark, I want to go to you first with this P&G story because it was fascinating. They're coming back, but they're certainly bringing in some provisos.
They are. Actually, that CNN story came out as I was communicating with P&G, and I sent it over to them, and they said, well, this actually proves our point here. What P&G is doing is they're coming back on only select videos that they say they have reviewed and approved, a set of 10,000 YouTube channels. It's very much more selective than they were before, and a lot of advertisers where their ads will end up sort of anywhere. What we saw yesterday with CNN is that there are a lot of brand advertisers that are still placing ads on YouTube and videos. They had no idea that they have some extremist content. So YouTube said they fix these issues as soon as possible. But it's been this long systematic problem at YouTube for the past year.
A long systematic problem that, Tara, you try to help offset. I mean, just how difficult is it to try and ensure that these extremist content don't keep on reappearing on social media and don't have the wrong sort of companies in some way endorsing it?
Well, there are two problems here, right? There are the advertisers who are having their ads run on content, not only that's problematic in and of itself, terrorist content, extremist content, racist content, anti-Semitic content. That's the first problem. And then there's a second problem, which much of this content violates YouTube's own terms of service, and they haven't been doing a good job of getting it down and taking it down. In the counterterrorism realm, we've repeatedly seen problematic content resurface. Last year, we saw ads running with ISIS videos. This year, the CNN report just showed that you're seeing the same problem continue on all sorts of horrific content, in some cases which violate their terms of service, in other cases just marked problematic and offensive, and they're relying in many cases on algorithms to dole out these advertisements. And obviously companies like Disney, Amazon, Hershey, they don't want their ads running on channels that are completely antithetical to the message that they're trying to promote in their ads, which in some of these cases were very, in the case of Under Armour, their ads often emphasize female empowerment, yet running on sexist YouTube channels. And then with Disney, ads that were emphasizing diversity running on racist YouTube channel. So clearly problematic. I hope the advertisers take action. Many of them have in the past, and hopefully if enough do that, you'll see the tech companies like YouTube and others as well cracking down on some of this content and also revising some of their policies. They've made some changes, but clearly the changes have not been enough.
Yeah, Mark, and to those changes, how much more can YouTube and its owner Alphabet promise to do here? And how much could they be hurt if we do see more advertisers start to kick in their heels and leave?
Yeah, I mean, the irony of the CNN news is that this might actually help YouTube. So in January, they announced that they have what Google Preferred is their premium inventory, so they charge advertisers more for what has historically been, they just say, like top shelf, like similar to TV. Starting in January, they're promised to review every single video that goes into Google Preferred before they run an ad. So now they probably will tell advertisers, listen, if you want to ensure that this never happens, we run 450 hours of video every minute with this massive catalog. Come buy into Google Preferred, which costs more, yes, but we guarantee you will never have problems like this again. So it's probably YouTube will be bifurcated, right? You have this kind of clean version for advertisers, and then you have the rest kind of Wild West where they don't have as many policing structures, but they won't have as many problems with major brands being called out, like the CNN story.
Wow, I mean, it looks as though there could be a business win here, Tara. But what about your company, your institution? What are they doing to try and help ensure that this sort of content is coming down in a speedy manner? This isn't just a problem, of course, affecting YouTube. It's been an issue across social media.
It's been an issue across all the major platforms, not just YouTube, which is obviously part of Google, but Facebook and Twitter as well. We've been extremely active in pushing for solutions on this front. In the realm of child pornography, they use special technology that's very effective at combating child pornography online, developed by Dr. Hani Farid at Dartmouth College. He's also with our project. We've been pushing for them to take a similar approach on the counterterrorism front. And also, we've been very active and involved on Capitol Hill. Someone from my organization sat in on the Mark Zuckerberg hearings just the other week. We've been in with lawmakers looking at ways that Congress can put pressure on these companies. And I think you saw in those hearings last week that, Facebook is coming to the realization that it's not going to be a question of if there's going to be regulation. It's going to be a question, and Mark Zuckerberg said this himself, of what the regulation is going to look like. And similarly, out of the European Union, you're also having a lot of pressure building there with regards to the tech companies, not just on counterterrorism, but on data privacy issues and a number of issues across the board that they've been dealing with over the past few years.
Yeah, new tough regulation coming in May 25th, so-called GDPR, General Data Protection Regulation. But talk to us, Mark, about regulation, about Capitol Hill, about potentially it not just being Mark Zuckerberg in front of them, but Sundar Pichai could be called up soon. We could see other tech leaders.
Yeah, that's a suggestion. Earlier this morning, my colleagues reported that some senators are saying that they want to see the CEO of Google, potentially, and the CEO of Twitter. So far, as far as I know, these senators have not called in the CEOs. They've just suggested it would be nice for them to come. I think these tech companies clearly don't want what happened with Facebook. They don't want Sundar Pichai. Google doesn't want Sundar. Twitter probably doesn't want Jack Dorsey in front of Congress. It's mostly just like a really bad PR situation for them.
Certainly. We will see how this continues on to unfold. Tara Meller, of course, we hope you do join us again soon. Counter-Extremism Project. Well, it's great to have you on the show. And Bloomberg's Mark Bergen, thank you, and a great scoop earlier today. Now, sticking with online ads, Twitter is banning ads from Russia's Kaspersky Labs. In an emailed statement, Twitter said the cybersecurity firm's business model conflicts with Twitter's advertising rules. It also noted that the US government claims that the company has ties to Russian intelligence. Now, Kaspersky's CEO fired back on Twitter, saying, now, no matter how this situation develops, we won't be doing any more advertising on Twitter this year. The whole of the planned Twitter advertising budget for 2018 will instead be donated to the Electronic Frontier Foundation. They do a lot to fight censorship online. Now, Twitter says Kaspersky will still be allowed to use its account on the site. Now, coming up, Ericsson's recovery plan seems to be working. That's as shares soar after first quarter results. We'll take a look at the numbers. That's next. This is Bloomberg. And now an update on the carrier collusion case we told you about earlier involving AT&T and Verizon. We're now learning that Apple is said to be behind the investigation that has AT&T and Verizon under investigation by the US antitrust officials. That's over, of course, possible coordination by the two companies and an industry standards group, that being the GSMA. Of course, the investigation is all about whether these two companies potentially made it tougher for consumers to easily switch mobile phone carriers. Apple currently saying that indeed they are behind this, and they have complained to the Department of Justice about switching issues. Meanwhile, Ericsson here in Europe is making progress in an attempt to reverse its fortunes. The Swedish maker of wireless networks posted first quarter earnings that were better than expected. Ericsson's gross margin almost doubled from a year ago. Now, the company is still facing a weak market for mobile equipment, but cost cuts and a new product line are helping. Joining us now from New York, John Butler of Bloomberg Intelligence to break it all down for us. And John, you put out some great research on this. I mean, we saw the shares up almost 18% at one point, best in almost a decade. What's behind the margin improvement? What's behind? Where are they seeing the cost cuts work?
Well, there's a lot of moving parts here, and I would say the biggest one for Ericsson has to do with their services business, where for years they were booking all these contracts that really, at the end of the day, turned out to be unprofitable for them. And so they're circling back now in a very methodical manner, and they're renegotiating all those contracts. And I think we're starting to see that flow through to the bottom line, and particularly, you know, it hit the margins. And so people really sort of woke up to the gross margin impact here. The other thing is Ericsson cut 17,000 people off their workforce last year. So that's a big component of SG&A. So I would say together, if I had to cite the two big factors here, those would be sort of the big two that stood out to me.
I mean, Bo Ekholm, the CEO, must be pretty pleased. I'm looking at RSI, the Relative Strength Index in the Bloomberg. If you type it in on the Ericsson stock, this is showing that actually we saw the stock surge past, what, 50-day, 100-day, 200-day moving averages. We're even seeing the RSI indicator showing that we're now in overbought territory. Are we likely to hold on to these sorts of gains? What do you think needs to be proved now by Ericsson to show that this really is the path in which they're likely to take the company?
Well, if you listen to what Mr. Ekholm had to say, you know, Ericsson is really managing to the future. I credit them with, you know, being a little bit patient here, because we still haven't yet seen that big uptick in carrier CapEx that's expected to go along with the move from 4G LTE to 5G. And so we'll see that flow through to the top line. I would say by the end of the year, we'll begin to see that. But in the meantime, it's a bit of a waiting game for Ericsson.
John Butler, fantastic research, and great to have you joining us. Bloomberg Intelligence on Ericsson. Coming up, we talk Bitcoin bouncing back. This is Bloomberg.
I'm Mark Crumpton in New York. You're watching Bloomberg Technology. Here's a check of first word news. President Trump has indicated he'd travel to Moscow if Russian President Vladimir Putin visits the White House. Russian Foreign Minister Sergei Lavrov says President Trump made the offer when he called President Putin last month to congratulate him on his re-election. France is suggesting that Syria and Russia may be covering up evidence of chemical weapons attacks. The country's foreign minister said today 2 weeks of, quote, obstruction by Russia and Syria is hurting the investigation. Inspectors with the Organization for the Prohibition of Chemical Weapons are in Syria but have been unable to visit Duma. During talks at the Pentagon with his Japanese counterpart, Defense Secretary Jim Mattis had this warning for Syrian President Bashar al-Assad.
There's been full support for that regrettable but necessary attack on his research and engineering part of his weapons program, weapons of mass destruction. He would be ill-advised to ignore the international community's statement.
South Africa's president has left the Commonwealth Summit in London to return home and deal with violent protests over alleged corruption. Cyril Ramaphosa, who took office in February after the removal of former President Jacob Zuma, is calling on the police to show restraint after a state broadcaster showed footage of police firing rubber bullets to disperse protesters. The Palestinian ambassador to the United Nations is calling on the UN Human Rights Council to look into the recent use of force by Israeli officers on Palestinian protesters. Riyad Mansour says he's spoken with his colleague in Geneva.
He will be beginning the consultations with members of the Human Rights Council so that the Council to shoulder its responsibility with the possibility of moving in the direction of the independent and transparent investigation.
Israel is closely guarding a border fence and warns it won't tolerate attempts to damage the fence or breach it and enter its territory. A South Korean official confirmed that a successful test call was conducted on the hotline between Seoul and Pyongyang. It comes a week before South Korean President Moon Jae-in and North Korean leader Kim Jong-un are scheduled to meet in Panmunjom. Global news 24 hours a day, on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in over 120 countries. In New York, I'm Mark Crumpton. Bloomberg Technology is next.
This is Bloomberg Technology. I'm Caroline Hyde. Now, the world's biggest cryptocurrency has its backers cheering once again. After gaining as much as 3% on Friday, Bitcoin may be poised to do something it hasn't done all year. Post its first back-to-back week of gains so far for 2018. Now, which, of course, you can have a look if you go into the Bloomberg GTV Go. You'll see the mini rally is helping to ease some of the pain from the more than 50% loss in the first quarter that followed last year's 1,400% surge. And joining me now to talk Bitcoin, blockchain and much, much more is Hemant Taneja, Managing Director of General Catalyst. It's the VC firm that has made early-stage investments in the likes of Airbnb, Snap, Warby Parker and much more. Great to have you joining us, Hemant. There are many people out there who say, look, I don't like crypto, but I like blockchain. I might not like Bitcoin, but I like the underlying technology. What about some of the new protocols out there? What about some of these ICOs? I mean, has anything caught your eye?
I think it's all really early. I mean, the analogy we often talk about here in Silicon Valley is it's like the early 90s of the internet. There are lots of protocols being tried. The technologies aren't quite mature yet, but the premise is really interesting. And what's exciting for us is the developer community here in the Valley that is going after trying to use these technologies and build interesting consumer experiences with them. So early but promising. I mean,
I'm assuming you're being overwhelmed with pictures left, right, and centre with anyone just saying blockchain and the headline. But what sort of main applications do you think so far have shown the most interest for you?
Yeah, I think a lot of the early work has been in the financial services infrastructure. So payments, rails, when you think about globally how commerce ought to be done. There's a lot now that teams are working on in healthcare and you think about other areas like music and so on that we are starting to see. But again, it's very early. These protocols are not technically mature enough to create great experiences yet. So I just want to caution, while the long-term promise is exciting, I want to caution it's going to take a while for these to become great companies.
And some of the caution, of course, that surrounds the ebbs and flows of the cryptocurrency prices is regulatory. And I want to talk to you about regulatory issues among the big tech giants, not just crypto as a part of it. We've seen so much in the headlines when it's Mark Zuckerberg on Capitol Hill, when we're talking about regulatory environment in general. I mean, your book that you've just written is really almost a guideline for entrepreneurs looking at a new era of regulation in technology. Who do you think is going to win and lose out of this?
Yeah, I mean, if you think about the last decade, we've organized content, community, and commerce online. A lot of the dialogue around Facebook and social media platforms today is, gosh, we had this purist view and we're clearly running into some issues that we have to solve for. Now, when you start applying those technologies and that mindset to sectors like healthcare and education, where data is that much more profound, how are we going to access the data, use that data, and deal with privacy and other issues? It all needs to be thought through before we start adopting this in those mainstream sectors.
How are you advising the likes of Snap, which was a key investment of yours? This is a company that in some ways could win out of the focus on Facebook, but equally might be under some regulatory cloud as well.
Yeah, look, I think Snap has an incredible opportunity, because when you think about it from a product perspective, they took a first principles redesign of how we ought to operate online in terms of how we communicate with each other versus where we consume media versus news. So it was a cleaner experience. Now, it's a very young company, and it's got lots of execution work it has to do to become a fast-growing and viable business. But I do think Snap and companies like that will have the opportunity to take advantage of some of the issues we're seeing in the first-generation social media companies today.
What about going forward? I hark back to your book because it has recently been launched, and it's called Unscaled: How AI and a New Generation of Upstarts Are Creating the Economy of the Future. Let's talk about AI, because it was a big week here in the UK. Interestingly, we saw lawmakers who've been studying the application of artificial intelligence and the monitoring of it came out saying, look, we're worried about the key US monopolies like Google, like Facebook, having too much of a monopoly over data going forward in AI. But it's not enough of a fear to warrant any sort of watchdog or overarching oversight over AI. Do you think that's wise?
I think we need a public-private partnership in how we use AI. Again, it's early days in AI, but having said that, the issues like transparency, the explainability of how these algorithms are being used, we need to be a lot clearer about how these companies are using them, and are they respecting the core values of society, and are they benefiting or not taking advantage of things like bias and discrimination. I think that open look into it is important. In my opinion, the government and the regulatory frameworks are very antiquated to actually monitor and govern these kinds of new capabilities. So the more this dialogue can be enhanced and the more they can work collaboratively, the faster we'll get there to take true advantage of these capabilities.
Do you see signs of collaboration? I mean, I know that you've spoken to lawmakers in the past. Did they listen to you?
I think so. From what I'm seeing, if you look in Europe, for example, all the GDPR work, I think that's the beginning of it. There's a lot of dialogue happening between Silicon Valley and folks in DC that is entirely about first getting them to understand what's going on, and then starting to think about, but how are we going to govern? I don't think the old frameworks will work. Where is the Department of Artificial Intelligence in the government that actually has the sophistication to make sure these technologies are being used responsibly and there's transparency around them? Again, that collaboration to me is clearly the next step to make sure we take advantage of these capabilities responsibly over the next few decades.
How does this all affect your investment thesis? How do you invest responsibly?
Yeah, I really look for founders, and we as a firm look for founders that have a long-term mindset. And I think companies that are being built today that have such profound responsibilities in, again, areas like healthcare, education, and finance need to be building products with the appreciation that they need to make decisions that are long-term great for the benefit of the society as a whole as well, and not be focused on things that might be short-term great for just growing fast. And you've seen a lot of companies run into those kinds of issues over the last few years. I think learning from those mistakes and building responsibly is a key area that we look for as we get involved with new projects.
Hemant Taneja, Managing Director at General Catalyst. Great to have your perspective across all things from crypto to AI, regulation, and new investment thesis. Now, Nintendo's $30 billion rally in the last year may now depend on cardboard. On Friday, the Japanese company started selling cardboard add-ons for its popular hybrid Switch tablet console. Now, the kits will let users transform Switch into a miniature piano, into a robot external skeleton, and other interesting objects. Nintendo wants to attract more users under the age of 16. Fishing rod, why not? Coming up, Data breaches continue to make headlines, this time with the SunTrust Bank as the victim. We look at the current landscape of cybersecurity. That's next. This is Bloomberg. China's ZTE is blasting the US government over the 7-year ban on buying crucial American components. Now, the communications equipment maker called the move extremely unfair and vows to protect its rights by legal means. The US said ZTE violated the terms of a sanctions settlement. Meanwhile, cybersecurity and why cyber attacks don't always come from outside actors. Most recently, SunTrust Banks, that's Georgia's largest lender, said it's investigating a former employee who might have stolen personal data on 1.5 million customers. Here to talk about investing in current cybersecurity landscape is Max Gazer, general partner at CRV. Earlier this week, Max attended the RSA Cybersecurity Conference in San Francisco. And what did you hear there? What are the trends? Where are the key threats, do you think, in terms of cybersecurity? Is it internal or external factors?
Yeah, thanks, Carolyn. This is probably the most important week in the cybersecurity industry. This is when everyone converges on San Francisco, and we have the RSA conference. So you have vendors announcing new products, you have customers coming in, trying to understand what's new, et cetera. You made a good point about the insider versus outsider threat. I think that security has been sensationalized, the fear has been sensationalized about the outside threat. We've sensationalized nation-state attacks, and I call that the 1% problem. The 99% is the low-hanging fruit that you've pointed out around insider threat. It's around general patch management of systems, et cetera, that we have not yet figured out.
So which companies thrive in this environment where it's general patch threat, perhaps internal bad actors? I mean, is there the likes of Oracle? Is it new startups? Where do we see it?
Yeah, well, let me be clear. I think that security is always an industry that has been fear-driven. So, to the extent that you have very scary level, nation-state attacks, and you have bad actors that are compromising systems, the new hot things will always sell. AI is front and center right now at this week's show. It will continue to be, and there's for good reason. But the traditional security vendors that are selling the basic systems as well will thrive. Cybersecurity is probably one of the most interesting spend areas in IT right now relative to other sectors, just because the threat landscape constantly changes, and it's the old products that sell alongside the hot new buzzy products as well.
I mean, I know you're in one particular cyber company, Respond Software. This is sort of about outsourcing your own IT, cyber IT department. What about the hot area of AI, artificial intelligence, helping cybersecurity? I mean, where are you seeing interesting companies coming from, and are you looking to invest in them?
Yeah, AI, I think, is a fantastic area. Security is a fantastic application for AI, I should say. There's a few reasons. One is you have a lot of data. So data is an ingredient for AI to work. So you have that. You have people that are under threat. You have people that are in need, and so therefore they're more willing to rely on machines to take over some of that work versus being defensive about it. And you have a willingness to work with things that are not yet 100%. So again, the threat is so real that a lot of times customers are willing to work with products that are not, that are in the startup phase. Respond Software is a great example. This is an ex-cybersecurity team, serial founding team. They are working on an AI-based product that is sort of the front line of defense for incident response. So the idea is that the AI handles the first level defense, and you have trained analysts behind that are looking at incidents that kind of bubble up.
Respond Software, for example, does it end up going public, or does it end up being eaten up by one of the older guard who need to have these exciting new areas of growth internalized?
Well, we always make our early stage investments with the expectation that these are companies that can go very big. I think you pointed out a good trend. Cybersecurity is one industry where there has been a lot of M&A. You've seen Palo Alto Networks and Splunk in recent months buy companies in the hundreds of millions of dollars. It's probably one of the most liquid markets in IT and enterprise software, just given the fact that there's lots of buyers, there's lots of companies, the space is very fragmented, and so you will continue to see a lot of M&A.
We'll look out for it, and we'll get your comment on it when it happens. Max Gazer, great to have you in town, General Partner at CRV. Thank you for joining us as you've been joining the RSA Cyber Security Summit. Now, coming up, tech earnings season. You know it. It's in full swing. Facebook, Amazon, Alphabet, all reporting next week. And you see the share price reaction today. We take a look at what to expect next. This is Bloomberg. It's earnings season again, and for the tech sector, it's shaping up to be one of the most interesting in a while. Global technology giants are suddenly being assailed from all sides. A brewing trade war between the US and China is threatening the global interconnectivity that has helped the industry thrive. Plus, a crisis has been spreading over how Cambridge Analytica got access to millions of Facebook users' personal information. And don't forget US President Donald Trump's Twitter tirades against Amazon and founding CEO Jeff Bezos. Both companies report earnings next week, along with other tech giants like Alphabet and Twitter. Joining us now from New York, Bloomberg Technology's Jared DeVink, and in San Francisco, it's Jitendra Worrell of Bloomberg Intelligence. Gentlemen, let's get to it, because Jared, I mean, first of all, I'm looking at Alphabet in particular, and it's all eyes on costs in particular for this company, isn't it?
Yes, the costs, I mean, those traffic acquisition costs, that's what Google pays to sort of third parties to kind of, rev up the advertising revenue that they get. But the other thing with Alphabet as well is they've sort of been able to kind of fly under the radar on this latest kind of data and privacy scandal. Of course, Facebook CEO Mark Zuckerberg bearing the brunt of the public and different governments' sort of attention on this issue. And, analysts will be asking Alphabet executives about whether they are worried about any future impact to their business, which also relies on collecting the data of millions of users.
Jitendra, you're an analyst who's going to be asking questions. Will you be looking at some of these companies about the spillover effect of Facebook and whether we could see more regulatory clouds gathering above the heads of Twitter and YouTube owner Alphabet?
Absolutely, and that's going to be the biggest thing investors are going to look out for, because what it does is it sort of raises compliance costs across the board. So it's not just Facebook sort of like increasing its investments in data quality and security and things like that, but it's also the ripple effect. So there'll be a lot of focus on the expense side, but actually if you look at the revenue side, I mean, at least looking at the traffic data and the demand for things like mobile advertising, mobile search, they look pretty strong. So their 1Q numbers on a top line perspective are less at risk, we would say, but it's the expenses going forward and the guidance around that is what's going to make the difference.
Garrett, let's look deeper into Facebook. I'm looking on my Bloomberg. If you dive into Facebook and type in ANR, analyst recommendations, very few seem to have been wavered by what's gone on. I mean, maybe it's a buying opportunity when you see shares fall off. In the yellow line, this is where shares are performing. The white line, much higher, is currently price expectations from the analysts. And look, 42 say buy, only 2 say sell. What are we looking for? What could shake these views? Is it going to be if we hear that there's more than the material impact that they say hasn't arisen yet in terms of spend from advertisers?
Yeah, I mean, like Jitendra said, I mean, these are Google and Facebook are really the only games in town for online advertising. Advertisers are, not running away. They don't really have anywhere else to run to. Consumers as well have really yet to sort of hashtag delete Facebook, even though some of them have said that they want to do that. But, Facebook has indicated that they haven't seen major numbers of people leaving the service. There's no proof in that yet. The specific concern here would be if governments around the world start forcing Facebook and other data collection companies to make it much, much easier for people to voluntarily opt out of those data collection sort of practices while still using the services. So in the EU now, the law requires that to be much easier. And there's ways for the tech companies to sort of still set up their terms of service so that people are kind of pushed towards sharing more data. But if regulators continuously and repeatedly clamp down and say, no, 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 you need to redo that, you need to redo that, that's when it could become a problem for them.
Yeah, Jitendra, that's really interesting. May 25th, big date here in Europe, because it's when the so-called GDPR, General Data Protection Rules, do come into play. Yeah. And in a way, they've become a global standard because Mark Zuckerberg said, look, we'll make our privacy updates not only relevant for the new regulation in the EU, but around the world. How much will this affect the business models of these companies?
Well, that's actually to be seen in the Q2 earnings, really. But based on all the testimony that you watched, I mean, Facebook was willing to sort of have some light touch regulations, and they did bring up GDPR a couple of times. But I think what's going to end up happening is first the regulators will wait and see how GDPR sort of plays out and what kind of best practices come out of it, and then sort of take those lessons and do the implementation. That's why I think in the guidance and color around like how these regulatory risks could impact revenue growth or user growth this year, any guidance around that is what investors are going to be very focused on.
Talking of regulatory risk, Garrett, I mean, Commander-in-Chief, Twitter extraordinaire. I mean, of course, we keep hearing from Donald Trump and issues about Amazon, Jeff Bezos. Do you think these tweets could turn into a regulatory issue for him? Do you think that there'll be changes in terms of how the Postal Service will work? And could this affect Amazon going forward?
Right. I mean, the president, it's been no secret that he's had, strong feelings about Amazon and maybe stronger feelings about Jeff Bezos, which, of course, also owns, in a personal function, the Washington Post newspaper. The tweets never really had an impact on Amazon until that specific Postal Service one, which kind of came at the same time as all this, concern about Facebook. It was, I think, the same week that Mark Zuckerberg was on Capitol Hill. The market was much more sensitive to regulatory risk. A few stories, some of which were broken by Bloomberg News, that kind of came out after that. It said, no one in the White House is really going to sort of, push the Postal Service to do anything, serious here. The Postal Service, by all accounts, seems to actually make money off of its contract with Amazon. Yeah. But at the end of the day, having the most powerful person in the world attacking you is not a good thing.
Garrett DeVink, great analysis from Bloomberg Technology. Jitendra Warrell of Bloomberg Intelligence will be speaking to you both a lot next week amid the earnings season. That does it for this edition of Bloomberg Technology. Happy weekend. This is Bloomberg.